All right. Ready, sir?
Let's do it.
Hello and welcome to this week's Closing Bell with Murray Dawes, the star of the show. We've got a lot to talk about, and it's all to do with artificial intelligence. So we're going to talk a little bit about CBA. We're going to talk about what's going on in the US and a few charts happening there, because it's really breaking out over there. It's really interesting. So, Muzz, how you been?
Not bad, buddy. Not bad at all. How you doing?
Very good. I quickly want to start with CBA. I won't spend too much time on it, but obviously it's been the story of this year, with it rallying way up towards $200. Not quite there yet, of course, but really big rally, and a lot of people put it down to just passive money moving in. I sort of said along the way that I felt artificial intelligence played a part, because so much of the bank's costs comes from wages, and if they could cut costs using AI, well, then that sort of justified in part the huge premium that it's got. Just recently we saw them come out and start saying they're going to let a few people go because in their call centres they're going to start using AI. How big is this trend, do you think?
Yeah, well, I mean, also Atlassian.
Yes.
Cameron Brooks coming out and firing people and pretty much letting on that it was to do with AI. I mean, we're a few years into this. This was sort of predictions made a few years ago, but it's been taking time for companies to work out just what the hell's going on and how to use it and where it is actually valuable. And I think we're maybe entering that patch where companies are starting to put it into practice, and we are seeing people get laid off. So that's the dark side, potentially down the track. Is there going to be a big swathe of middle management that disappears, and what effect does that have? Maybe stay away from retailers and that sort of thing. The fact is, companies being able to cut costs massively like that, AI coming in, still being very efficient, margins go up, don't they?
Absolutely. Profits go up. Yeah.
So maybe, part of the reason we're seeing this real takeoff is on the back of that. And what did we see with Meta and Microsoft? That their investment is actually sort of working out and they can fund it. So Meta, this is just a chart of Meta here, up 10%. And this is a company that's gone from $100 to $700 just in the last 2 years. And after a results announcement, going up 10%. So it's surprised the market so much that people are saying it's smashed expectations. Yeah. It's like, well, let's get on this. And Microsoft on the same day, opening up and having a massive run.
A weird thing now that we have is some people are very fearful of what AI could do to employment, but as you say, it could be very good for the stock market. So we could have a situation where the stock market is booming, but the real economy is actually really hurting. And
yeah, it'll be like two-tier. It could. It'll be interesting to see how it plays out, because I'm a little bit sort of wondering what's going to happen and a bit fearful of it. And it is like white-collar jobs, isn't it? Like at a lawyer's practice, where you've got 5 bankers, graduates or people in, and you say, can you go and research all of this for us? Now they're going to have one guy doing the research and tracking all of the AI. But these high-level jobs could be the ones that actually go. But then will they then go into other areas? And, there's demand in the AI areas in other ways. So maybe, it's all going to work out in the wash. This is in the past. How many times have we had people freaking out that technology is going to take over? It's been 100 years of people saying that, and it's never really worked out that way. So, but I am, I'm very intrigued to see what happens, and do we start seeing a real flood of it across the board? But that means it's not just looking for AI companies that are making money. It's also what companies are going to benefit from using AI and upping their margins. And that's where you say CBA, the finance industry, of course, lots of staff, lots of technology. They might be the first cabs off the rank to really be able to ramp things up and cut staff and increase their margins. So there is definitely a case to be made.
And we should say too that if this trend keeps playing out the way it is, I mean, we're seeing some huge moves in the US, but it could keep going. I mean, it could keep driving stocks for ages. We keep hearing that the US is overvalued and all these type of things, but you look at so we've got Meta here, which is Facebook. Now, I mentioned to you just before that back in 2023, I said to my guys at one point, I expect a new bull market driven by artificial intelligence in the US. And at the time, I decided that I would stick to Aussie stocks because I felt they were in my circle of competence, that type of thing. And in hindsight, that wasn't a great decision because just there's so much action in the US that we just can't replicate it here.
Australia's a backwater. You know, we're a small percentage of the 3-4% of the overall market cap in the world. Do we have all of these future-facing industries? No, we've got banks and resources are like a quarter of the whole market, or more. You know, and we've got millions of little resource stocks and that sort of thing. Our tech sector, there's a few things you can pick through which are interesting, but we certainly don't have a thriving VC market which is feeding into great, projects. Often it's a biotech that'll be funded by universities, start here. Not much VC action here, so they go overseas, and all of a sudden they're making all the money overseas. So I think offshore's, you see where the Nasdaq's gone and where the ASX has gone since the lows in 2009, and it's just crazy.
Well, they just have such big addressable markets, right? Like Facebook has 3.5
billion.
So there's Meta amongst all their apps. That's half the world,
it's
basically.
It's completely insane.
It's ridiculous.
I'm sure there's double counting. If I've got an Instagram account and a Facebook account, is that 2 people?
I don't know.
Do they add that up? So there's probably some double counting.
Well, it's still a lot of people.
But it's a lot of people. It's completely bonkers. This is a new world we're in, isn't it? And this is Microsoft. So we've had the April sell-off, and look at that, from $350 to $533. One of the biggest companies in the world, just taking off like an absolute rocket since the lows recently, and actually jumping massively just on their quarterly.
And Nvidia's done the same
based on the
thing.
AI, yeah. So we're seeing the numbers are coming through that their massive investment is actually sort of working out, and that I know now my AI usage is just going up and up and up because I'm starting to learn how useful it is and how many different areas I can use it in my work. So I'm using it massively more. And so it will be really fascinating to watch how this plays out. But yeah, most of the opportunity is offshore. I mean, look at this. This was a company that just listed in the US. There's not a lot of data for this one. so this one's 1 day worth of trading. I'll flick it to the daily just to prove to you what I'm saying. So here's it listed with an IPO price of $33, and here it is opening up at $85, and by the close of trading was up at $115, nearly tripling its IPO price. Multi-billion-dollar company. I think it's a collaborative tool for creating apps and websites. It's used by Netflix and Uber, and it's got big growth, massive growth in revenue last year of about 50%, about 700 million or something revenue. So good prospect, but boy, the IPO market might be back because that's been dead. It's been dead in the water for the last few years.
It has.
So maybe that's a sign that really we are at the early stages of some sort of crazy melt-up. And
some people might say that we're already in this crazy melt-up, and it's all froth and God knows what.
I'm certainly of the view that, because I've been saying that everything's pointing up, all looks good, we've broken out, all blue sky, but there's sort of a danger zone not that far below here. But as long as we stay above that, I'm saying, we've got to be confident enough to say that this really could keep going. But then I'll be prepared to, I guess, lower risk if we get a very sharp sell-off from here, a false break of that February high. I'll actually bring it up just quickly.
Well, just as you're doing that, we should point out, I think it's important that the companies are hitting and beating their earnings estimates. So you can't really say it's froth to my mind when they're actually posting these kind of numbers. I mean, Nvidia is just selling so many chips, right? So there's just revenue and that goes through the roof, and the capital spending that the big guys are doing now, it's just, that's bullish for the economy.
And it's going to keep going. It's enormous,
It's huge, yeah, absolutely huge.
If I'm looking at this is just a weekly chart. And so this is just, for me, is that area where I'm a little nervous is when it's just above a former high like this. So when it breaks out like this is when sort of amateurs are saying, it's a breakout, buy, and all of a sudden the music can stop. And if it does actually fail and turn down, look, it could have quite a correction, but that might be a correction like this and then take off like the rocket. So this would just be a short-term bearishness, because long-term it's all still massively bullish big picture. But that's just my only nervous thing is thinking, well, is this going to have some sort of correction just to shake out any new longs? But then I'd be looking at it as a buying opportunity, that it might just be continued to the upside, because big picture, this whole thing is still flying to the upside on a monthly. Look at this, since '09, it's accelerating, absolutely flying higher. And you could have said the same thing when it broke out here. You can be nervous for a little bit, but once it really starts trending, there's a lot of money to be made once it really gets going. So we could be in that. We could be in for a serious run if, as you say, AI really starts shipping through, that all the numbers are coming through, and companies start really using it, margins start really powering ahead, and maybe the market starts to look cheap. I mean, there's a possibility that could be the case.
Absolutely, and we should say here in Australia, a lot of people were fearful from that 22, 23. So as the market keeps going up, it keeps sucking in more and more people. There's lots of opportunity in all sorts of different areas. So, but you're right, we could get another bout of volatility. There's always something.
It's always, and it's usually when everyone's bullish like this. This is why I'm so fearful of these moments. It's just because it's when it's breaking out and trending and like this. That's when all the news articles are all super bullish. Everyone just gets into a bit of a frenzy. And that's why the market is just so good at shaking everyone out before continuing on. But there was along the way. That's what you have. You have these periods. But if you gave up every time it had one of these pullbacks, you'd be feeling pretty silly now with the market up here, wouldn't you? So you're going to have corrections along the way. That's sort of what happens. It needs to sell off a hell of a long way to turn this into a monthly downtrend. So that'd be the only time where I'd be saying, oh, look, we've got to be really prepared to watch out, because there's 2000 monthly trend shift, there's 2008 monthly trend shift before the crash, and really there's nothing all the way through here that's really serious, and there's one little one here that did last for a while, but then turned back in a monthly uptrend there. So just based on this, going back, 25 or more years. If you're just following that monthly trend and saying, well, I'm not going to freak out until I actually get a monthly trend shift, and if it does happen, then I'll worry about it then. But for the moment, it's pretty amazing.
Thing too is earlier in the year there was a lot of chat about the US debt, and we saw the bonds, sell off, and that seems to have fallen away now. Everyone seems to have got comfortable with the massive deficit that Trump was going to run and keeps running.
Yeah, well, the bonds aren't really reacting, are they? They're sort of rallying. I think after this deal, so the biggest thing that's happened in the last week is the deal with Europe, the euro getting hammered, because everyone has been saying, oh, this is bad for the US, and they've been reallocating money to Europe and Japan, not putting as much money into the US. US dollar's been selling off sharply, and now they've done a deal where everyone's gone, actually, this is totally in favour of the US. Trump has actually won this round. Europe's blinked, and it's going to be probably bad for Europe and good for the US. All of a sudden, the euro gets hammered. And I'll actually even bring up the euro just quickly, just to show you that. We don't talk about the euro much.
Funnily enough, I just read a book by Kenneth Rogoff, if you've heard of him. I think that's his name. He's an economist, but he was blabbing on about currencies and things. But he thinks that he's a bit hazy with the timing, but in the next 5 to 10 years, we're going to get another bout of big inflation. So that's one of those tail risks that we'll have to address at some point, but. Yeah, what can compete with the dollar was his basic point, was that, well, China, it's not convertible, the euro, you don't have a proper union, that type of thing.
And here's the euro long term, just to give people a sense of what's really been going on. And I'll focus in on just the last, few decades, because I'm sure everyone can see there quite quickly. It's a downtrend,
It hasn't really done much for years,
No, but you don't need to be... too smart.
Now that big sell down in 2012-ish, was that's the Euro crisis? The Eurozone crisis, I assume, right?
Yeah. So just to show everyone the big picture, and I'll even do this just to show the start of it. So we're looking at what has been a downtrend for a long time, and just recently we've had this big run. This is Trump and people saying, oh, the euro, this is where you want to put your money, etc., etc. And now they've done that deal, and people are saying, oh, watch out. And where I'm wary is, everyone understands my buy and sell zones. Hopefully, if you're new, you'll work it out. The sell zone being the 75 to 87% retracement of the previous wave. So we've got this down wave there. There's your initial down wave. And then I'm looking at the area, the 75 to 87% retracement of that is the sell zone, and that's where the selling pressure can come in. So you can see over and over that's been what's going on as this thing has sold off. So many instances I can show you of these waves and the sell zones and where the selling pressure comes in. And funnily enough, where we are right now, of course, being that sell zone area here of this little wave that we've seen in the past, that little wave there. So it's right up, it's had a massive quick squeeze up into this sell zone based on a multi-decade downtrend, which is still actually in play. So for me, I'm sort of looking at that going, well, that's quite interesting. Maybe everyone's got this wrong, and US dollar may actually be about to strengthen, and that is actually a perfect selling moment there if we get the sell signal. So that's where I'm saying, well, this actually could be a reversal for that US dollar, which is not something I expected, and that's markets love doing stuff like this, just throwing you a curveball. So looking at the
There's actually,
US dollar.
So I was going to say the article earlier in the year, I think it was, that a lot of US guys are buying up places in Europe because their currency's so
right.
strong.
So this is where it's interesting what's happened, right? Especially for us with commodities and all that sort of thing. I've been looking at this, which was the most recent massive upwave there in the US dollar. That's from 2021 to 2023, the huge run up in the US dollar. So then I'm looking at that up close and considering where all the support and resistance zones are. So initially it got sold off from up this sort of 108 area. So it's been a big strong sell-off in the US dollar already, and it's gone pretty hard to the downside. Now I thought it could break the lows and actually have another sort of wave to the downside into that buy zone area. So this is sort of where my targets were on this move to the downside, but it nearly got there and didn't do it. And now we're having this sharp rally from what is short-term oversold bounce, and possibly heading back above those lows. So all of a sudden, this can do this. It can really rally quite strongly. Whether that turns into a much bigger trend, I don't know. But just at the moment, it's looking like we could get a surprising move to the upside in that US dollar, which is then affecting gold and platinum and silver, and all those things have been frothy and they're all a bit overbought. So maybe we're going to see a bit of a commodity pullback, a US dollar jump, and we have to start thinking about the market in those terms, in the immediate future.
Well, if you look at the numbers that the big stocks are putting out, that still makes US assets attractive, that type of thing. Bit of scuttlebutt from my network is that oil might be in for a surprising rally too, and that would help the US dollar with them being such a big producer.
I haven't been following oil. It's just been no man's land for me. I've been waiting for it to break out either way, and I'm not really sure what it's going to do.
Well, yes. What are we now? August. So, yeah, let's see what happens in the next few months. We'll come back to that idea, but has oil bottomed? Well, we will see. All right, well, you mentioned, actually, a couple of weeks ago we mentioned Belvedere and his surprising trade in Warner Brothers, and your 10-year-old son actually had a pretty good idea last year, right, that you put here on the Closing Bell? Yeah,
well, I've only done two in Closing Bell in the last few years, two US stocks. One of them, Spotify, I tipped at $150. That's now about $700.
Yeah.
That's been in 2 years. And the other one was thanks to my son Daniel, who constantly
drains your wallet,
constantly sends me broke, making me buy what are called Robux, which is money within the game, and this is a gaming platform.
Yeah, my daughter pays it as well.
Right, I think everyone, all the kids love it because you can actually make your own game. The kids can make their own games, and then the platform shares revenue with people who make games. So you've got this non-stop new games going into the platform.
Like a network
people
effect.
People can make network effect. People get into it, and the amount of money. When I'm paying $5 for a fake car, my head just shakes. But anyway, he has fun. And I actually talked about this one when it was $50, And be sure, if you did buy it, I do want to know people who are long this and happy. So after you've pressed like on YouTube and subscribed to the channel, let me know if you actually got on this one, because I did say it at the time. It was about $50, so it was around here. It had a good quarterly. And I was saying, look, there's your rounding bottom.
That was a classic shape too from that period, that bear market period where things started to get accumulated. There's so many stocks with that shape.
Exactly.
Absolutely.
So you've got the nice clear out. This is what I like to see. You know, the big spike, everyone got it wrong. The clear out and the panic, and then the rounding bottom shaking everyone out who bought it in that area, just getting sick to death of it, and everyone who bought it here even getting sick to death of it because it went nowhere. And then finally the numbers start coming through, and you've got the breakout. So you've got the breakout, then the retest, which I guess some people would call the cup and handle or whatever. And then off it goes like a rocket, and actually flew last night massively after a quarterly result. So that's, $50 to $140 in, 8 months. How many stocks have we got on the ASX that are doing that sort of move, and that have that technology platform, have that reach, which is worldwide. They're growing massively in Japan, growing, you can look at the possible revenue outcomes coming down the track in this sort of thing, and you think hundreds of millions of children bugging their dad for $10 to buy a fake car.
Yeah.
And your mind boggles, like with Spotify worldwide. Just imagine as they slowly start ramping up, paying instead of $15 a month, now it's 20, now it's $20.
That's what Netflix
now
has
it's
done.
20, yeah, exactly. And all of a sudden the revenue possibility, and very sticky. I stay with Spotify. I'm not moving to Apple Music or anything, because I don't want to lose all my playlists and all my, So that's the sort of business you want.
Does Apple even have Frank Sinatra on their thing? No, I'm joking.
I thought it was Barry Manilow was your favourite.
Absolutely. But again, you see, like, with a reaction to the quarterly. Now, I love when they do the announcements, because if you get that good reaction, well, the stock is in a very secure place, right? Because the numbers are out, the market's happy with it, and odds on it'll keep going. So as long as companies are posting results like this, well, then you got to get amongst it.
Yeah,
Roblox, look at that, bang.
And it'll sell off and shake out all the new people. This is how the market loves to move. But then back to the moving averages, and you probably start picking it up again. But so I was happy with that. So that's where, you look at these offshore stocks and you just go far out. There's some big moves that happen, and when they trend, they absolutely trend for ages and ages. So being able to capture some of these things, and you think about the world markets that they're going into and the areas they're in, which are really future facing. It's like there's so many opportunities over there.
And we should say, just with AI in general, is it, of all the, we always get these thematics in the market. I mean, it just can feed into so many different areas, whether it's the chips, like Nvidia, the hyperscalers, the commodities that you need, the end users.
Yep. I'm now looking at the robotics. I'm thinking about robotics. And really robotics should have a massive leap forward now with AI. Because all of a sudden if you can now use AI, tap into it in your robots to be able to see their environment, be able to tell what they're seeing quickly, or ReRAM technology, for example, that might be able to bring all of that. So you've got it all happening in edge AI, where it's happening not into the cloud, but actually at the point where the unit is. All this sort of stuff's happening, rapidly advancing.
Do you want to just quickly, sorry to bring up Tesla just while we're talking about this, because I was going to say too that, their car numbers are actually quite poor at the moment.
Yeah.
But the stock itself is actually hanging in there, and that's
they're in that robot. Maybe they're going.
Well, that's what I say. It's all the only thing that's, I think, propping it up is the idea of the robo taxis and the robots and that type of thing. But actually, now that you bring it up, it still looks a bit. What do you think? You tell me. But,
yeah, I'm.
But if you just took it out off the car results, you'd think it'd be worse. But basically, so that's the market looking for that thematic, is what I'm driving at.
Yeah, it is a tough one, because it's, when you look at it from the numbers point of view, the fundamentals on base, and the fact that the earnings are going down,
that's what I mean,
sales, it's like, my God, this is just so overpriced.
180 times earnings.
It could absolutely crash, But then if he does all of a sudden release the best robot that in a few years Optimus is going through the roof, and it's like he's such a genius. I'm actually listening to a book, my audio book, when I walk the pooch every morning and night and that sort of thing, on Musk, and it is fascinating. He's a fascinating guy. And he's just relentless and so detail oriented and so many ideas. He's just a genius, complete genius.
He's got the Starlink, which is like a whole other.
There's so many Neuralink. You got the
billion-dollar companies. Coming out of his ears. He's unbelievable.
He is unbelievable. So it's still trending up. It's actually a buy, as I said recently. It's a buy on my sort of system, monthly buy pivot there. So there is a case to be made.
But as you say, again, what does robotics do to employment? If suddenly a robot can pave your driveway for you or something. Then you could have Tesla at $1,000 a share, and
everyone out of work.
Every paver can't get a job.
I know, this is a new world we're in. We've got to think it through and really set your portfolios up towards it and around it, thinking about what's going to happen.
Who wins? Yeah, winner takes all.
That's it.
You should put what's that sweet ABBA? Winner takes it all. That's the
I
next
could sing
one
it for you if you like.
Please do. That's your investing philosophy.
Right. Might leave it there, huh?
Alrighty, we'll leave it there. The winner takes it all is the theme of today's closing bell. But yeah, those any of those international stocks that can just monster the world market, primed to keep doing it. All right, we'll tune in next week. And if you like the episode, give us a thumbs up.
And subscribe.
Subscribe. Don't forget to drop a message if you want Murray to chart a particular stock, whether it's US or Australia. We're happy to have a crack. And we'll see you next week. Thank you.
Check you later.